Good morning, everyone. Happy Wednesday. We have got a lot to talk about today, and I haven't done a public video in a while. So remember, we do have our Advantage community, so all my attention and my energy and my time really goes to them. And all these lock channels that you see right here, folks, all these gains that you see are from our Advantage members. And there's times where I provide some free trades over here in the free channel right here in community discussion. So again, if you are interested in joining that, go to cryptosomniac.com and hit the products page right here, and you can join Advantage right there, or buy my technical analysis course to learn technicals. And you can even do this yourself, or you can come join with 7 free days that comes with this course right here, okay, in our Advantage community. All right, so let's get right to it. Okay, so first things first, I really want to discuss this 1 hour chart first. Yesterday, this ascending sort of trend line was being played about right around this area right here. We did have this short squeeze 2 days ago, and I actually shorted right here, and I closed out my position somewhere around this area, or actually somewhere around this area when prices started to climb back up. And then I started to go long, but then I didn't realize that we were just going to get stopped here. Okay, I thought we would go kind of like this, double top, and then pull back around. So I got stopped out of my trade. And then after that, what we're really seeing here is a breach of this trend line, as you can see, right? We held this trend line as support right here, broke through it a little bit. And I want to tell you guys a rule of thumb of mine, okay? Whenever you see a clean candle like this closing under the trend line, and you don't see a large bullish engulfing candle after that, like there's no hard and fast rule that if this trend line is breached, then you don't get in, then you sell or get out. It's typically when you see something like this go up, come back down, get rejected by the same trend line, then you either short up here or you sell your long right there. Okay, I typically don't just do it, right there, unless I see a massive, bearish candle all the way down here, and then the follow-up bullish candle again is just a rejection, and then it goes down. Okay, but what happened right here was that we had a weak pullback right here. Over here, this was another opportunity to short, which I did in terms of paper trades. And then, we went down again. Why did I short right there? Because we just created another lower high right here with less volume, as you can see, compared to this movement or this movement right here. Okay, and then we went down just as expected. And now it looks like what we're doing again is going down further, because what's happening is something like this. Okay, this little area right here, as you can see, where this was support, is now being rejected as resistance. Okay, so more than likely we're probably going to go down at the very least to this level again, which is 10,150, or lower down here, which is about $10,100 or so. Okay, so I'll be looking to open some short opportunities there. You could see that the descending trend line on the RSI is still sort of holding this thing down, and nothing has come out of that just yet. Okay, very low volume, overall going down in this 1 hour chart right here. So nothing, nothing that we are not sort of expecting out of this movement. On the 4 hour chart, let's see, I'm gonna pull up the 4 hour chart here. Oops. 4 hour chart, things do look interesting. 4 hour chart, we have this ascending trend line right here, and we have this descending parallel channel, which we have not broken out of yet. Okay, so because we haven't broken out of this yet, I can only assume that this descending channel will still be intact. And another interesting thing about this price action over here on the 4 hour chart is that we are in this ascending trend line right here. 1, 2, 3 touches, 4 touches right there. 5th touch we had yesterday. And now, as you can see, this 4 hour candle right here is really coming close to it. Okay, it is coming very close to breaking that trend line, which we haven't done yet. but it looks like this one wants to, or the following one might. Okay, and so what that tells me is this could be another short opportunity, or like I explained earlier, you could have a breakdown like this, pull back, get rejected at this trend line, and then push back down. Okay, but I personally think that this is, you know, statistically it's higher likelihood to break down than break up now, given the fact that we're just not able to muster up enough strength to sort of, you know, break out of this trend line. You typically want to go on trend lines like this and you just take off. When you come back to it, you take off again. You don't just, you know, kind of come to trend lines like this and just hover sideways on it. You know, it's the same thing as support and resistance. If this is support right here, this trend line right here, and we go like this and you kind of just move sideways near it, more than likely it's going to break down. Same thing like resistance. If you kind of move price up like this and you hover sideways, you're going to break up, right? So consolidation near support or resistance, you know, more than likely leads to that particular area being broken, okay? The volume on this thing, again, also dismal. And I want to show you guys this pivots chart too. The pivots overlay, as you can see right here, we are still, again, under the 4-hour pivot, unable to cross above it. You know, so this again speaks to the lack of strength in Bitcoin right now. Now, overall, you know, I haven't been a perma bear, but I've been a bear enough to recognize that this is not a, you know, in any way, this is not a convincing sort of structure that tells me that we're going to break up. Okay, this descending triangle, in my experience, when you see it after big parabolic moves like this, especially, you know, we've seen this in Bitcoin before because, you know, this whole thing right here was a descending triangle after a big parabolic move, right? That broke down, as you can see right here. So I'm expecting something like that over here as well, okay? But again, that doesn't mean I'm, you know, 100% confident that it will break down. It's just that I am careful and I'm not going too heavy on spot buys or longs or shorts to just go all in and say, hey, we're going up or we're going down, right? So just got to be cautious. Now, another thing that has got me extra cautious is this. If you are in the US, or even, you know, you're concerned with how the global markets are doing, this is something that's happening today. This was yesterday's news, but this is now today, okay? The Fed Reserve Chair, Jerome Powell, is probably going to announce either a cut or a hike in interest rates today. My guess is it's probably going to be a cut in interest rates, you know, probably further sort of giving some fuel to the market in the US equities market, but it's the wrong kind of fuel, I'll be honest, okay? I mean, if you're a greedy capitalist, you want him to cut rates. But if you are somewhat pragmatic and you understand that you do not cut interest rates at the end of a 10-year bull market like this, we are, you know, by and large, sitting in, you know, the largest sort of 10-year streak of a bull market that we have seen. As you can see, this bottom right here in 2009, and we took off all the way over here, September 2019. That's here right now. Or I'm sorry, September 18th, 2019. Okay, so you could see that this is, we're at the peak of the bull market, guys. Like, you do not cut rates, you know, to fuel up the economy, rile up the economy right at the top. You do it when the economy is struggling, like it was down here. This is actually when the Fed did cut interest rates, and this helped fuel the fire, but they never went back to raising interest rates in this entire 10-year run. So why am I telling you this, and why does it matter? Okay, so you can see that in this S&P 500 index, we are printing something that looks like this ascending triangle, okay? The S&P 500 is unable to break out of this 3,000 point ceiling right here, as you can see, okay? Once it, you know, breaks out convincingly and with volume, this could be the start of another maybe 3-6 months, maybe another year journey of the stock market where it could go to higher highs. but I'm telling you that it's going to go to higher highs very cautiously, and I bet you all the smart money is going to do its best to sort of sell their assets right at the top and hand them off to retailers as best they can. Because at present moment, consumer confidence is slowly, being chipped away. And consumer confidence, at least in the US right now, is directly tied with the stock market. Because in 2019 or 2018 December, when the stock market fell like this, we actually saw a drop in retail sales, in commercial sales for the average consumer, meaning that your typical blue collar workers, people across the board spent less money going into the holiday season, or less money in general in the month of December and November right here when the market fell like this. So this tells me that the Fed chair really, really needs the American consumer confidence to stay high. And he will do probably whatever it takes due to the president, Donald Trump. Whether you agree with him or not, he is wrong in pushing his Fed chair to drop interest rates. Okay? This is basic economics, and basic economics is clearly not understood by people in politics right now, which is that you don't cut rates at the very top. You're basically going to be fueling the stock market being run on stilts. Okay, stilts meaning that it's going to run up on less volume and less interest by smart money, because they already know that we need to be careful. At any point, this house of cards is going to come crumbling down. So now, what does this have to do with the crypto markets, right? So with the crypto markets, I want to show you guys something. Okay, here is the drop that we had from November down into December in the stock market. Okay, and I want to show you all over here exactly what happened right at that same time. As you can see, middle of November all the way to middle of December, we had that same drop off right here. Okay, now for the last 3 months, we've been in sort of this consolidation, right? Well, check this out. Since over here in June or May, over here, this has been in consolidation mode too. It's really not going up. It's kind of just tightening up in this, coiling ascending triangle. So it's doing the same thing. There's really a decision point coming right here in the stock market. And personally, in my opinion, if this thing keeps going up, then I think crypto itself has a better chance to keep going up too. Because from what I've seen, not that there's a huge correlation between the stock market and the crypto markets, but when we had this top right here in 2018 in the stock market, and then the stock market fell off right here, right? As you can see, this was the top of December 2017 and January 2018. Even over here, guys, it's the same thing that happened right there. You can see right there, okay? December 2017, January 2018, we started, dropping off, right? All the way down here. And we bottomed right around February 2018. I don't know when this thing bottomed at, actually. Let's see. Actually, right around the same days, actually. You could see the bottom was put in right here around February 8th or 9th, right there. And you can see the bottom was put in right there around 6th or 7th. So around the same dates. It doesn't have to be exact. But you could see the tops and the bottoms. And even this consolidation pattern that you're seeing is sort of, correlating to what's happening in the crypto markets as well. This big consolidation. Okay, so this tells me that the professionals are involved in this asset class, especially from the US and probably around, the world as well. And they're kind of waiting for what the stock market is going to do, and maybe even, the rest of the trading in the financial world. How is the health going to be of the overall US economy, of the stock markets? And is crypto worth sort of fueling higher, or do we sort of let go of our positions in crypto and the stock markets and wait out the blood? And the blood for crypto could be at the very least 7,500 to about 8,500 or lower. So that's really the sort of cause for concern right now. Waiting for this to happen. This will happen in the next I want to say, I think it's 6 hours or 7 hours from now. So just something to keep an eye on, folks. All right. Again, 4-hour chart, really just coming to this ascending trend line. Personally, I think it's going to break down, but it hasn't yet. So you could wait for that confirmation for it to do so. Okay. On the daily chart, here's something that's also interesting is we keep hammering away at this particular block where prices bounced up and away from, right? And you can see, again, prices are coming down to that same area again. So if this low gets taken out, which is about 10,093, or you have a daily candle close under this, more than likely, we're probably going to be targeting this area down here, around $9,600 to $9,400, okay? But we haven't quite done that yet. All this is just a slow bleed that's happening right now. And I don't know if, we're going to definitively break this. We have to see how this daily closes. If it doesn't close, as expected, we could have a little bounce up like this and then pull back around, okay? Because, I think there's enough demand waiting in this area to disallow it from, closing in this trading range, this parallel channel structure. You can see every time the wick sort of touches this area, it just gets rejected. Even over here, touches it, gets rejected. Over here, touches it, does not let candles close in the body of this candle. Okay, so I would say when a daily candle does close in the body range right here, then you want to start paying attention. Okay. The BTC dominance, here's something really interesting too, which I wanted to point out. Let's see, I'm going to turn off this cloud right here. Actually, where'd it go? Oh, there it is, the T sequential. I'm going to turn off this 200 moving average too. All right. Okay, folks. So here's something that I had mentioned way over here. Okay, this was end of August right here. I saw this bearish divergence playing out. Remember, that's higher highs in price and lower highs in the RSI. Okay, and I had drawn this rising wedge, and I stated that more than likely the Bitcoin dominance is going to be coming down. I don't know how fast it's going to come down, but as you can see, this is the first big drop-off candle that we've seen right here. Okay, so if candles continue like this on the way down, you're going to see, these alts pop off like Ethereum and XRP and all these, altcoins that you've seen the last 3 or 4 days that have been taking off. Okay, which is, pretty normal, I would say, right? Because altcoins have been dying for a breather from Bitcoin, and they're finally getting it. They're, doing whatever it takes to sort of get some gains squeezed in. And, if you are looking for altcoins to trade into, I would probably say now is, probably the best time, in my opinion. But the interesting thing about altcoins is that they're all also facing resistance. So that chart that I just showed you, the Bitcoin dominance chart, it could really just be doing sort of a fake out, just a real quick fake out to the downside and then pushes back up. Because here's the thing, Ethereum still needs to reclaim over 232 to at least take out a big sort of consolidation or a lower high until it can be fully considered, largely bullish, reversing this whole 3-month downtrend. Okay, XRP, same thing, right? XRP is over here. It needs to at least, okay, on this daily chart, let me make this a 3-day chart right here. XRP, again, needs to cross above this white marker, which is about 3,300 points, or 3,300 Satoshis, could be considered that, this could be a mini alt season. You could definitely get into XRP right now and target this high right here. And same thing with Ethereum. You can actually target that $230 resistance that I just showed you earlier, okay, if you really want to get into alts. But again, XRP could drop, from there down all the way to this bottom red marker around 1,400 sats, all the way down here. Okay, it's still very possible. because it basically found support really in no man's land right here. And it's probably just curling back around, tapping resistance over here, and then potentially pushing back down again. Other alts, let's see, XLM. Let's see how XLM looks. XLM BTC, I think is probably that chart. There it is. Okay, here's XLM too, right? XLM actually, seller actually broke through the critical resistance or support way down here. And now it's looking to, again, test that same area as resistance. So you can see all these alts, all they're really doing, folks, is they've bled so much that like 10-20% movement is like an alt season for everyone. I mean, I think we need to forget this whole alt season that happened in 2017, because in my opinion, that is the biggest sort of reason and fallacy that most traders will not succeed, or even investors will not succeed, because they're still holding off for that, you know, the sort of high gains that they had in 2017, like 100% gains or 300% gains or 1,000% gains, right? I don't know if that's ever going to happen. I mean, this thing is down like, I don't know, 70, 80%. You would literally need, let's see, you know, from here, just in sat value, from here to the all-time high, you need an 800% movement if you bought somewhere, anywhere over here, okay? That's not reasonable, all right? Let's call it what it is. It's not reasonable at all, okay? So if this actually happens, right, you know, if we have a little alt season, I mean, this might be it. You might get, you know, maybe 100% gains, 200% gains, and that's it. So we need to actually sort of forget, you know, this whole alt season and what's going on with altcoins and, you know, how much they could go. Take, you know, the gains as you can. All right. Stop getting greedy and thinking that we have to go back to all-time highs and we're down 80 or 90% and it's a discount. Okay. Don't think that way, because that is really the gambler's, you know, sort of mentality. Think that way. Okay, and this is not a game of gambling. This is skill and art that requires trading, and more importantly, you know, patience and capital preservation and risk management. It's everything but gambling. All right, so, you know, take my advice for what it's worth. Take the gains while you can. Buy support, sell resistance. You know, trade it as best you can. All right. Now, it looks like we're dropping off in Bitcoin, as you can see. And like I just showed you earlier, you can see that we got rejected by this area right here and we pulled back around again. And now probably this 4-hour candle is now starting to breach through. So remember that we need to wait 13 minutes probably to see if this 4-hour candle right here closes under. And then again, you probably might have a bullish candle that presses up. But if it gets rejected by the same trend line, and then you can expect it to pull back down even more. Okay? It is bouncing off this EQ as well, so this is kind of a good sign, I guess. Even as per the Bollinger Bands, I like to look at the Bollinger Bands quite a bit, and this was like a perfect setup for a short. Unfortunately, I went the other direction. I longed because I thought we were going to break this band to the upside. So that was a mistake, which I'm happy to admit, but this was then a perfect short opportunity if you saw it the other way, which was, you know, first rejection right there. Once you broke down under the Bollinger Band, second rejection, third rejection, and boom, you know, now you're falling off. Okay. So just, you know, be careful, folks. I hope today's analysis helped you. Again, don't get too excited with the alts. You know, take what you can get. Bitcoin is still, again, at a very particularly vulnerable spot, as I've said. You know, no one really knows which direction this is going to break out of. My opinion is that, you know, this thing is going to break down. And we've actually already been breaking down. I mean, you know, I made this call right here that we're going to break down. I even stated over here. I actually got into a short right around here and said that it would break down. We even shorted like somewhere in these candles right here and said it would break down. So for the most part, you know, we've at least been trading this range and doing a decent job at it, because you can see it in our gains reviews right here from all our clients, right? As you can see. So again, if you're not part of the Cryptosomniac Advantage community, come join so you can get some gains like these guys right here. And I will see y'all soon. All right, take care, cheers, and have a wonderful day. And make sure you pay attention to this Fed Reserve announcement. All right, folks. All right, have a good one.